In the fast-moving world of digital advertising, the trade desk stands at the heart of the programmatic revolution. As the clock struck Q2 earnings on August 7, 2025, all eyes turned toward Ventura and Wall Street braced for impact. Despite beating revenue expectations, $694 million versus $685 to $685 million forecasts, the mood turned dark after hours, with the stock tumbling 26 to 30%, driven by cautious guidance and a leadership shakeup. What Wall Street is saying. Revenue grew 18.7% year-over-year to $694 million. Adjusted EPS of 41 cents matched or slightly beat expectations. But guidance, even at $717 million projected for Q3, did little to excite. It met, but didn't exceed, street hopes. Investors also digested the CFO's exit after a decade and incoming CFO Alex Kayal's appointment. Wall Street had hoped for bold numbers. Instead, they saw modest beats and cautious guidance, and the result was a sharp sell-off. The analysts take a blitz of cautious optimism. Consensus. Over 30 buy ratings. Sell, the mood remains strong buy. Price target averages between $94 to $95. Earnings and revenue forecasts. Analysts still expect solid long-term growth, earnings forecasted to rise approximately 29% annually, revenues climbing approximately 15 to 16%. Simply Wall Street. Despite the bruising sell-off, the analysts remain hopeful. Growth engines, CTV, AI, international markets, are still firing on all cylinders. Amid the storm, analysts hold steady, projecting growth, stability, and a future beyond the volatility. But like every epic tale, the next chapter, the Q3 guidance, will define whether the trade desk soars again, or fades into the shadows. Let me know if you'd like help shaping visuals, pacing, or additional scenes to bring this script to life with full cinematic flair.